going on, YouTube traders, investors? Today is an update video on Energy Transfer, ticker symbol ET. Now, the whole energy sector, oil, everything is on a huge downtrend. We're talking way down, and the current crisis hasn't helped anything out, but there is a glimmer of hope. Let's get into it. Before we get into the chart and looking at where the stock may be headed, if you like this type of content, please subscribe to the channel and hit that like button. It helps out immensely. Now, we're going to go ahead and jump into the recent news. The first bit of news is going to be on the 31st of March. Energy Transfer announced a quarterly cash distribution and earnings release and earnings call dates. So basically, they paid out for the fourth quarter, and they announced that on May 19th, 2020, unit holders of record as of the close of the business day, May 7, 2020, will get the regular distribution / dividend. So the main reason I want to talk about this is because Energy Transfer has not cut their dividend. Like a lot of other companies that have, they haven't, and they don't plan on doing it. So that's some good news. The next little bit of news, which is very little, Wells Fargo maintains overweight on Energy Transfer. They did lower the price target to $12, which you're going to see almost every company that has been affected by the crisis has lowered their price targets, or the analysts have lowered their price targets on these stocks, and it's only fair for right now. Now, I mean, if you've been paying attention to the market, it has been on a huge rally, so everything is subject to change. On the 15th of April 2020, Yahoo Finance did an article saying, "Is the options market predicting a spike in Energy Transfer stock?" And the article goes on to say investors in Energy Transfer need to pay close attention to the stock based on moves in the options market lately. That is because the May 15, 2020 $5 put had some of the highest implied volatility of all equity options today. So basically, when the IV, or implied volatility, is high on these options, a lot of people like to sell them. So if I'm going to sell the $5 puts, I basically want the stock price to go up because I'm selling the put. And whoever's buying it from me, they're wanting the stock price to go down. So basically what they're saying is a bunch of people, the implied volatility came up. I don't know the exact volume on what that day was for the puts and calls, but obviously they're expecting a move in Energy Transfer relatively quickly. So on to the last bit of news. On the 17th of April, there was an article put out on Bloomberg titled "Energy Hedge Fund that shorted oil sees chance for $100 a barrel." That's crazy considering that we're right around $20 a barrel right now, and it doesn't look like there's any chance that's going to happen like anytime soon. But I'm going to read a little bit of the article. I'm going to talk about it for a second, give my thoughts. Then we're going to jump over to FinViz, look at the dividend or the distribution, and then we'll jump into the chart. But in this article, even as oil prices are battered down to 18-year lows, one energy fund thinks that $100 a barrel is achievable. But first, prices need to fall even further. That's not good. But in the long run, I think it could work out for energy investors. Westbeck Capital Management Energy Opportunity Fund climbed 20% in March after declines in the first 2 months of the year, according to an investor letter. That puts the commodity-focused fund up 3.7% in the first quarter after U.S. oil futures cratered 66%, their worst quarter ever. So basically, this company made a lot of their money shorting oil, puts, shorting stocks, stuff like that. But they've since turned around and they are saying that $100 a barrel is achievable. And I'm thinking, how is that achievable right now? And I guess it's not right now, but they're looking at the end of 2021 going into 2022. So you're going to have to be a long-term investor in energy. But the way I see it and the way this article kind of talked about is, the OPEC is reducing. They're cutting back production. A lot of companies that are oil related are cutting back right now. Now, when they cut back, how quick do you think that they can just all of a sudden start producing more? It's going to take time. And this is leading to, if the coronavirus crisis ends relatively in a timely fashion, not that this doesn't drag out for a year, but let's say it's over in a few months. We start driving our vehicles more. Production is going to have to come back up, and they're not going to be able to do it that quick, which could lead to a shortage and a spike in energy. So that is the possible theory that could play out. Now we're going to jump over to FinViz and check out that distribution. All right, here we are on FinViz, probably the best free stock screener available. And as you can see, here's the chart. We're going to go ahead and scroll down to the important numbers, and it's going to be this one right here. The dividend yield percentage is 19.81%. They have not suspended or cut their dividend. So that's $1.22 per share divided over 4 quarters. It's a little over 30 cents per share. So onto some other numbers that are relevant. And for the past month, this stock is up over 35%. The last trading day, which was Friday, over 8%. So there is some movement in energy stocks. We'll look at the payout. This is the dividend payout ratio, 89%. It's going to be more in these type of companies, this limited partnership type of companies, just how they're set up. We're going to look at the current downgrades, which was April 13th, a downgrade from Wolf Research from outperform to peer perform. And you could expect all these to be downgrades lately. March 24th, a downgrade from Barclays, overweight to equal weight. And March 16th, a downgrade from Morgan Stanley from overweight to equal weight. So that's going to be in line with what is going on right now. So this has been the dividend/distribution portion. Now we're going to jump back to the chart. Okay, here we are in the Thinkorswim platform. This is presented by TD Ameritrade. If you would like to use this software, all you need to do is open up an account with TD Ameritrade. Once you've completed the process, you can download the software to your PC, to your Android, to your Apple device, and it'll be all good. So here's the 1-year chart. Just a quick glance. We hit a high of almost $16 back in April of last year. Then we kind of traded in a few ranges. As you can see, this is right in this area where I started covering Energy Transfer. And as you can see, there was some support at about 13 and some resistance at about 14 prior to that high. So we bounced between 13 and 14. Then the support broke down. We found more support at about 12.30 and a resistance of about almost 13. And then we broke down again to a low of around $10 and something. And then we started a small uptrend. You see, we broke through that 12.20-ish resistance and hit, the support. We broke through that, hit the resistance at 13, dabbled around, then we broke through it, going all the way back to almost 14. Then we came back and traded in that channel of 13 and 12. Well, we'll say 12.30, somewhere around there. And then the current crisis happens. And this is almost a straight shot down to $3.75 on the 18th of March. Crazy. This was crazy times right here. But this is where we're at right now. And there is that glimmer of hope that if we can get through this coronavirus crisis relatively quickly, which, who knows? If we get back to somewhat normal in a month from now, the plan that I talked about with the supply and demand issue could play out. Maybe quicker, might take a little longer than what we expect. But with commodities, it's a supply and demand issue. So the quicker we get back to working, open up the economy, the more people are going to be driving, the more they're going to be consuming oil, energy, everything like that, which with all the cuts that just happened could create a shortage, which would drive up oil and energy stocks. So that's the theory behind the $100 a barrel article. But anyways, here we have the low on the 18th of March at 375. So we're going to just draw a trend line out here and kind of just, we're going to have to follow this. This particular stock and energy in general is not rallying like the rest of the market. And I want to show you something real quick. Go to drawings, Fibonacci right here. And we'll take this high right here. We're going to bring this down to the low of about right there. So on the S&P 500, we're already above a 50% retracement. When with this particular stock and probably most energy stocks, we're just a little over 23% retracement. And on the NASDAQ, we're already broke through the 61.8 retracement on the Fibonacci. So we are lagging, but that's to be expected with energy at this time because there's not a lot of demand for oil. So this is where we're at right now. So if you like the video, or you like this type of content, please subscribe and please like the video. It helps out tremendously. And if you want to be notified of future videos I post, smash that bell, and I will see you in the next video. Thanks for watching.